Assalamualaikum warahmatullahi wabarakatuh. My name is Nisana Suha binti Abdul Rashid, and I will present about market ratio analysis. And I would like to introduce my group members. The first one is Aini Khalisa, that will present about the overall performance by IHH, followed by Nadia, that will present the overall performance of KPJ, and the last one is Nisha, that will present about the overall performance of Kosan Rubber. So, our company is under Healthcare Industries. So, let's enjoy our presentation.
Hi, my name is Nur Khalisa Ahmad Fazli, and I want to talk about the analysis of IHH Healthcare Company. So, the background of IHH Healthcare Company. IHH Healthcare Berhad is an investment holding company based in Malaysia. The company offers a comprehensive range of integrated healthcare services, hospital and healthcare, IMU Health, P-Life, REAT, and others are the segment of the company. Firstly is common size. Based on figure 1, the total current asset decreased from 16.93% to 16.50% from 2019 to 2020. In contrast, 2020 to 2021 shows an increase in current assets from 60.50% to 18.75%. IHH shows an increase in current liabilities from 2019 to 2021, which is from 11.87% to 13.29%. However, the long-term debt shows an increase from 2019 to 2020, which is 18.35% to 19.46%, then decrease from 19.46% to 16.72%. The possibility of this happening because of COVID-19 will affect the short-term items. Next is total equity. The common stock increased from 43.18% to 43.73%, and then decreased from 43.73% to 43.10%. Okay, next is IHH index trend. IHH sales have increased 1 to 9.44% from 2018 to 2019, then decreased from 1 to 9.44% to 116.35% from 2019 to 2020. IHH's cost of goods sold increased from 142.68% from 2018 to 2019, then decreased from 142.68% to 129.67% from 2019 to 2020, and increased from 129.67% to 162.61%. The operating expenses increased by 118.87% to 116.98% from 2019 to 2021, and increased from 116.98% to 135.74% from 2020 to 2021. Moving to the earning before and after interest tax, also shown an increased trend from 2018 to 2019, a decreasing trend from 2019 to 2020, and then an increased trend from 2020 and 2021 because of the sales trend. That is all from me. Thank you.
Okay, I'll be talking about KPJ, its background, its common size analysis, and its index trend analysis. So, first, the background. KPJ, or its full name is KPJ Healthcare Berhad, is in business of holding investment and providing management service to its subsidiary. The subsidiary primary activity are the operation of the specialized hospital. So, KPJ is divided into two segments. First segment is Malaysia. Second segment is other country. Yes, because technically, it's focused more on its activity or exploration in Malaysia itself rather than other country. So Malaysia is in or actually have its own category. So in Malaysia, it provide activity or healthcare activities such as private hospital, pathology and laboratory service, pharmaceutical and all that. While for the other country, it only provide 4 service. That is hospital, healthcare service, private university college of nursing, and sale of hospital merchandise. That's the only thing they provide. Right. And it also run 28 hospital in Malaysia, only two in Indonesia, 1 in Bangladesh and 1 in Thailand. So that's the background of the KPJ Healthcare Berhad. So now let's look into the common size. We look into the common size actually. We will first need to look to the asset. So in the asset, we focus more on only 2 items: total current asset and total long-term asset. Because if we look into it, total current asset actually has a downward movement from 2019 to 2022 before it increased back in 2021. But on the total long-term asset, actually it's increased first from 2019 to 2020 before it decreased in 2021. We can see this from the number itself actually, because total current asset is 90.7%. Decreased to 70.40% and then increased back to 90.7%. While for the long-term asset is 1.82%, then increased to 2.13%, then decreased to 2.02%. So that's the asset for the KPG common size. While for the liability and equity, so focus on liability first. Liability, we focus on the 2: total current liability and total liability. Okay, because when you look into it, total current liability actually has a pattern of increasing. Yes, from 2019 is 20.01%. Then it increased to 20.06%. Then it increased sharply in 2021 to 25.54%. Well, in total liability, actually it showed a downward movement. That is 68.38% decreased to 66.62% to 65.49% in 2021. Now, for the equity, if we look to the equity actually, the common stock actually show up and or show a down and up movement, while for the retail earning actually show an increasing. Yes, in 2019, common stock is 50.50%. Then it decreased to 14.81% to 15 to 51% in 2021. While for retail earning in 2019, it is 16.89%. Then increased to 17.40% to 17.68%. So actually it's different between those two. But actually not weird, because when common size decrease, retail earning actually show increase usually. Now let's go into index trend. When we look into the index trend, we can see actually in 2019, all of the item, net sale, cost of goods sold, total operating expense, earning before interest tax, and earning after interest tax actually is above 100%. This is because technically that is the year COVID-19 actually about to begin. And 2020 and 2021 is the year that technically is hit hard by the COVID-19 itself. And that's why we can see in 2020, it decreased into 70.47% for the net sale itself. And then for the earning after interest tax, it decreased into 58.34%. So you can see technically all the portion, or technically in the net sale and the net of the interest actually decreased because of the COVID itself. But we show a good movement or good sign, because technically 2021, the net sale increased to 79.41%. But only the net sale actually increased, including with the cost of goods sold and total operating expense, because earning after interest tax actually decreased. That is 34.57%. But it's showing good sign because the sale itself is increasing. Because of anything, the net sale actually need to increase first before anything else increase. So that is the for KPJ analysis of common size and its index trend. Now I'll be giving this to my friend.
Assalamualaikum, my name is Nur Nishani Laila binti Muhammad Nazari. Today I will present about common size and index strength of Kosa Rubber Company. Kosa Rubber Industri Berhad is a Malaysia company that engages in investment holding activities, rubber product sales and management service to subsidiaries. The business is divided into four divisions, which is technical rubber products, glove other than clean room glove, clean room products, and investment holding. In Malaysia and Hong Kong, the company has manufacturing facilities and sales offices. Next, we go to the common size. For the common size between 2019 and 2021, the total current asset increased from 39.52% to 70.57%. The increase in current asset from 2020 to 2021, however, is from 16.5% to 18.75%. The quick rise in short-term investment is what caused the increase. The long-term asset meanwhile showed a decrease from 4.36% to 1.32% between 2019 to 2021. Next, the current liabilities for Kosa Rubber show a decrease from 2019 to 2021, going from 27.79% to 16.25%. The same is true for the long-term debt, which show a decrease from 2019 to 2020. This is beneficiary since from 2019 to 2020, the common stock share of total equity decreased from 30.62% to 6.38%. In the meantime, retained earnings increased from 46.07% to 73.28% from 2019 to 2020. This is causable because retained earnings will decrease when the price of common share increase. This is because the value retained earning comes from earning less common stock. The total dividend paid to common stocks holder decreased from 13.62% to 6.38%. Between 2019 and 2021, as shown by the statistic above, as a result, retained earnings increased from 46.07% to 73.28% between 2019 and 2021. The last one is index strength. Kosa Rubber net sales has been increased from 103.58% to 309.8% from 2018 to 2021, which a very good performance as a growth percent is 206.22%. It indicates the firm has been good business growth. The same goes for the gross profit which we get from the net sales subtract from the cost of goods sold. Gross profit show from 69.87 to 501.34% from 2018 to 2021. Next, the earning before and after tax also show an increase from 2008 to 2021 due to the increase in sales. Sales are rising quickly from 2008 to 2019 to 2021, from 103.58 to 309.8%, according to the index trend. The rise can be demonstrated by the fact that after the pandemic, there will be a steady increase in the demand for gloves due to increased hygiene awareness in both the medical and non-medical sector and improved healthcare standard. The firm average selling price has increased, which is the second factor contributing to the rise in sales. These are the causes of Costa Rubber upward trend from 2018 to 2021. As a result of this sales trend, the earning before and after interest tax likely was exhibit an increased trend from 2018 to an increasing trend from 2020 to 2021. Thus, it is clear that the sales trend had an impact on revenue, operating costs, and the cost of products sold. That's all for me. Thank you. I will pass to my next group members.
Market analysis is very important for external people such as investors to look at, as it helps to make what decision is worth to invest in the company. Based on the graph for IH company ratio, both EPS and PE ratio shows higher trend, meaning that both EPS and PE ratio are overvalued. Overvalued in EPS indicates that the company will have more profitability in the future. When a company has higher profitability, perhaps the shareholder will get higher dividend in the future. Overvalued PE ratio indicates that investors willing to pay higher share for the company. Next, for KPJ, the EPS shows decreased trend. This is possible as the sales is negative from 2019 to 2021. Meanwhile, the PE ratio shows an increased trend, meaning that the value is overvalued because some investor will think that KPJ will have good project in the future. Next, for the Kosan rubber, the EPS increases, meaning that the EPS is overvalued as the sale increase from 2019 to 2021 compared to the other companies, as we can see, and the PE ratio decreases because after 2021 or after a massive resignations, perhaps the demand for the growth decreases. Because of that, some investors are not willing to pay higher share as it could not be worth in the future. So, in conclusion, we think that IH is the best. As we can see, the net sales are double from 30 million to 70 million from 2019 to 2021. Other than that, IHH is a blue chip stock and the company has many subsidiaries in the world, such as in Turkey, Singapore, and China. IH also has many innovations projects in the future, and this is might be the possible investor to invest in IH. So that's all from me.